Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look at the euro currency again. So let's see what the coming week is prepared to us on the trading side. So as usual, we have prepared the weekly report. Take a look at the fundamental factors. Well, there are not a lot of something really new, but some nuances of the same driving factors are worth of our attention, and we have talked about it. So currently we see few moments that could be important in the near term. First of all, if you remember last time, we have talked about the problems that vaccination could meet in the short-term perspective, and in general in 2021 actually, because it's not enough capacity to satisfy demand for a vaccine. And currently already the representative persons of drug makers told the same. So it means that vaccination could last longer and in fact will be last in time. So hardly we will get the good results or any results till the summer. But here some tricky moment exists. That's how long central bank would provide the exceptional stimulus until inflation will show the drastic rise on the markets, and whether vaccination will provide this time limit to the central banks with providing the stimulus. This is the cornerstone of the current fundamental background on the euro currency. And everybody talks about the dollar weakness in the nearest time, but it was interesting to hear the Davis Securities analysis that said we expect to drop as euro currency as a cable to the summer. That could be triggered by the few moments. First of all, it could be the positive reaction on the vaccination, as central bank could start to decrease the amount of stimulus, and that should make supportive impact on the dollar. This is one of the possible scenarios. Another scenario, this could be vice versa. As inflation will start to rise, that could trigger also demand for United States dollar, as the Fed will have to change their policy. So this is a tricky moment that we discuss in today's fundamental report. Additionally, speaking on the Great British pound, we see another hidden pit is the elections in Scotland in May. This could become another bump of the independence in Great Britain. So if the leadership will come to the parties that support the independence from the Great Britain and out of the Scotland exit out of Great Britain, that really could become the reality as well. So this is another impact that Great British pound could get from the Scotland this time. And this is definitely worth of our attention. That's what we could meet in the medium term. Still, we think that until the spring, the existing trend should hold on the market, and we keep our medium-term forecast that market euro has enough power to hit 126, 128, 130 target cluster on the monthly chart before other factors will intrude and start pressure on the euro currency. So we think that 126, 130 is quite achievable target for the euro currency in the nearest term perspective of the few months. That's what we have on the fundamental part. So if you would like to know details, you could read that report. Not really very extended this time. So speaking on the technical side, meantime, in a shorter time, we see signs of the possible deeper retracement on the market. Last week, if you have read the report, we talked about the Harami pattern right on the top on the weekly chart. And we said that mostly it shows indecision scenario, but everything depends on the breakout. If market will be able to break it up, that will be positive decision, and market will continue upward action. In the case of the failure, be prepared for the deeper retracement. And take a look what has happened last week. the nearest standing targets that we have, 23.11, has been reached. But so grabber is completed because the new tab has been formed. XLP is completed, but take a look what really we've got. This is wash and rinse of the previous tab, which is potentially bearish. That's also sharp reversal here, fast acceleration that provides us the bearish engulfing pattern, and this suggests a deep retracement. So in the coming week, we are watching just for 128 level because the oversold on the daily chart stands close, and it's more probable that market could reach 128. But potentially would not exclude the chance of retesting with 120 as well. So this will be normal. So other words speaking, in the 1, 2, maybe 3 weeks, we could get some deeper downside retracement. That stands if we exclude some low probability extraordinary factors. As you know, on the 6th of the January there will be big hearings in Congress that should also confirm the results of the elections, and whether Donald Trump should provide exceptional facts of the fraud and trying for the last time to contest the results. In absolutely surprising progress of the situation, we could get the announcement of emergency regime in the United States. If Donald Trump, of course, will go with this step. But that will be a very important effort from the Republicans to contest the results. So this is very low probability, but some risk factors that could really trigger exceptional drop on the euro currency and acceleration to the United States dollar. But we keep them outside of the table, and currently we're discussing only more reliable factors that really could happen. And currently it seems that at least 127 area could be reached. On the 4-hour time frame chart, take a look. We do not have direct ABCD patterns by far. That's why we apply different tools to estimate the possible targets. So butterfly that we have discussed has been hit pretty nice. Now what we could get? First of all, it could be the hand shoulders pattern, right? The neckline around 121, 121.30. 121.30, 121.50, that's the level that could be reached as a neckline to the downside. Next targets will be 2080. This is 127 extension of the whole butterfly. This target usually used as the ultimate targets of the butterfly, this butterfly's reversal pattern, and the market indeed turns to reversal. We use these extensions to the downside. This agrees with the next levels, 27 to 21.15. That's actually daily fib support that we have mentioned before. Finally, in the shorter term perspective, we have 1618 extension as well. That agrees with retesting of the 120 level, 120 in previous tops on the daily chart. It's right here. So 3 targets that we have currently to the downside. All these targets have chance to be hit because overall reversal stands sharp with the patterns on the daily and weekly chart, and we have compound bearish divergence with the MACD. So this recent divergence suggests taking out of these lows, while previous divergence suggests taking out of these lows. That means that all the targets could be reached within the few weeks. So currently we think that it's not time to go long on the euro currency and watch for retracement. If you have the bullish you would like to buy, just sit on the hands and see how downside action will develop, and keep an eye on the major levels where we could consider taking the long position, and if we will see some bullish signs here. For scalp traders who would like to go short, you could use the hourly chart and some fib levels to consider for possibly taking the position. So for example, it could be first level confidence, looks very attractive around 22.45. It's also trend line broken to the downside, so market could retest this trend line, for instance. Also you could hide stops above the top, above the next fib level, 22.70, or just slightly above the confidence's ultimate stop placing, with the managing stops as soon as market will start to show the bounce on the break even and see what will happen next. So different degree of the management exists with the stops. Choose what you like more if you intend to go short on the euro currency. So that's our view on the euro. Although we expect some deeper retracement within a couple of weeks, we think that it shows no hazard to the medium-term bullish trend by far, and euro keeps chance on upper continuation to the targets that we have on the weekly and on the monthly chart.